welcome to Flanagan's Eco Logic. I am your host, Ted Flanagan, and today I've got George Dyer with me. He is the co-founder and the executive director of the Intentional Endowments Network, a nonprofit peer learning network. Its focus is on catalyzing investments for an equitable, low carbon, and regenerative economy. George, welcome to the podcast.
Thanks so much for having me, Ted. It's great to see you.
How are you today?
I'm doing great. It's good. You know, fall's coming into the air and things are busy, but all good, doing well.
Good. Well, how did this come about? As I understand it, I've done a little bit of digging on your website.
Mhm.
We're looking at higher ed institutions. There's some 2,000 of them in America. There's 20 million people a year that are being educated by these institutions, universities, and colleges. They have about $650 billion worth of endowment assets. And I guess there's another $890 billion of retirement funds. And what happened? You and Tony Cartesi, our friend, you were looking at this and saying, how do we shape this, or how do we catalyze these? How do we move these dollars into really socially responsible purposes? Is that pretty much the genesis of it?
Pretty much. So Tony, who you mentioned, had been working with colleges and universities for many years around sustainability in everything that they do, but a lot of the work was around the education, the research, the campus operations, and sort of the endowment investing was getting less traction. It was just sort of hard to have those conversations. And there's sort of and I think this is true at a lot of institutions that have endowments or investments, they often get sort of siloed off, and the investment committee or, the investment team says, we'll focus on this and try to get the strongest returns we can. And you can worry about everything else with the institution. And so he hadn't done much with endowments. He had started another nonprofit called Second Nature in the early 90s and worked with colleges for, a couple of decades on these topics and really helped build that whole field of sustainability in the higher ed sector. And I connected with him it's about late 2006, as he and Second Nature were getting a climate change commitment off the ground, where college presidents were committing to going carbon neutral and coming up with climate action plans to get there over the long term. And that initiative, that was right about when An Inconvenient Truth came out, and there's a big student movement, and there's a lot of desire for action on climate change. And so that commitment took off, and several hundred colleges signed it and were working on those plans. And so we sort of supported that network for several years. And again, the endowments were intended to be a part of those plans, but they rarely were. I think it was just people were getting their hands around how to build green buildings and get the renewable energy and look at the transport and all the other activities on campus. But around 2013, the students started calling for fossil fuel divestment from the endowment.
Yeah.
And that's what really kind of sparked this network where a lot of the presidents that had made this commitment were kind of stuck between their students looking for divestment and their investment committees who didn't necessarily want to go that direction.
It seems like you're really diving into a very touchy or very sensitive area.
Yes, it was, particularly at the time. I mean, there's a lot of tension around it. And so we saw it as an opportunity to bring endowments together so that they could learn from each other and see how their peer institutions were both responding to this stakeholder pressure from students, but also how they were deciding whether or not they were going to divest from fossil fuels. And we saw it as an opportunity to, help them do that if that's the direction they ultimately ended up going, but also to broaden the conversation and show that there's lots of ways to address issues like climate change and other social and environmental factors in the investment process, and do so in ways that, definitely align with their fiduciary duties and don't sacrifice investment returns, because that's what most of the investment committees were worried about, right? They didn't want to do something that was going to hurt the endowment, given it's their fiduciary duty to protect that capital.
Here's the bottom line question. Do you think that since then that their investments, that their returns have gone down substantially, or are they on par, or have they actually gotten better as a result of your work?
Well, it is case by case. I mean, overall, net, all the data, all the research, all the anecdotal evidence we see has shown that sustainable investing strategies of various kinds tend to perform as well or better than as traditional strategies.
Yeah.
But there's so many ways to go about it. And there's so many different asset classes, and different endowments will approach it in different ways. Obviously, there are different market cycles where certain strategies will do better than others. So it's really hard to sort of just put a blanket statement on that. But yeah, I mean, by and large, those that have done it well, have done it thoughtfully, have shown not only that it doesn't sacrifice returns, but it can help really reduce risk and open up new opportunities for stronger returns.
That's fantastic. Congratulations, by the way. Good stuff. I mean,
Thank
it
you.
really got sparked off by the investments in oil, wasn't it? The divestiture.
Yeah. Yeah. Well, I mean, all portfolios basically have some investment or exposure to fossil fuels.
Yeah.
And I think, as a group of actual, primarily students and some faculty and others that kind of took a page out of the divestment movement around apartheid in South Africa from the 70s and 80s and said, this threat of climate change is so existential to us in our future that we don't think these institutions that we're affiliated with, that we might donate to in the future, should be investing in these companies that are kind of driving that.
Yeah.
And so there was sort of, there's that sort of political, I guess, or activist motivation on the divestment side. But then there's a real, I think, strong financial argument too that goes something like, if we as a society pass laws and regulations to transition away from fossil fuels because of the risks they pose around climate, that a lot of these companies, their value is in their on their balance sheets is in the reserves that they hold. And if they can no longer dig those up and sell those products, whether it's oil, gas, coal, their value is going to be a lot less than it looks like right now. So there's that whole stranded asset concept. That was the financial argument too.
So, George, I mentioned in the intro there's about 2,000 higher ed institutions in America.
Mhm.
I believe you have about 250 that are part of your network at this time. What about the rest of them? Are they still stuck in the old trenches, or are they also gradually moving?
There are a lot are moving, and just the numbers can be a little kind of trickier to pin down. I think there's actually more like 3,500 to 4,000 colleges and universities. Only about 2,000 of them have some sort of endowment. So, and
Yeah.
of those 2,000 that have some sort of endowment, within our membership is about 250 members, but about 130 of those are college and university endowments. And we also have asset management firms and investment consulting firms and others that work with endowments and foundations on these topics
Yeah, they're your
in the
members.
membership. So, but the others that
And
are moving.
I'm sorry, you mentioned that there's other, or you in your literature, it talks about other endowed institutions.
Mhm.
What would those be? I mean,
That could be anything from, museums, cultural institutions, other types of nonprofits, environmental organizations,
mhm.
faith-based institutions. So any, essentially nonprofit with an endowment, a pool of capital that they invest.
Yeah.
And so our niche, our focus has been a lot on higher ed, but we also have, foundations and some of these other types of institutions that have endowments in the network as well.
Any churches in there, or would that be
Mhm.
considered endowment?
Yep, absolutely. The Church Investment Group is one, the Episcopalians.
Yeah.
Yeah, there are a few sort of, a lot of individual churches have endowments, but then also, kind of regional national networks will have larger endowments too.
What about nuclear? This is one of my favorite topics.
Mhm.
How I pretty much got into the energy business was in the anti-nuclear movement. Is that I know that there's a big debate about whether that is a is carbon dioxide related or not. But
Mhm.
is that something that students wanted the divestment from as well?
We haven't heard too much about that. That hasn't been a strong. I mean, we talk a lot about the energy transition, and that sort of debate around, is nuclear a good solution or not,
Yeah,
comes up quite a bit. But we
yeah,
haven't seen too much student or stakeholder pressure around divestment specifically. It's really more been around the fossil fuel companies. And yeah, I think, we're pretty agnostic, or totally agnostic, in terms of our membership and how they approach this. So we're not prescriptive in saying you should invest in this or you should not invest in that, but we're helping our members kind of learn and evaluate the risks and opportunities and then set their own policies. But yeah, nuclear, so I think we have some that potentially see opportunities there, some that definitely want to steer clear, whether it's for, kind of, they don't believe in the financial case or for some values alignment reason. But yeah, it's more been talking around the transition from fossil fuels to, other renewables and solar, wind, geothermal, and the like.
Yeah. So how do you then, a member comes or joins, an institution joins your membership.
Mhm.
I understand you've got virtual and in-person convenings or meetings that are going on. Uh,
Mhm.
you've got a benchmarking. Let's talk about some of the tools that you use to influence that portfolio that they each have.
Yeah. So we, again, we really think of ourselves as a peer learning network. So we try not to be prescriptive, but we bring people together and expose them to some of the strategies that are out there, expose them to to what some of their peers have done. And again, show that financial performance to sort of show that this can be done without sacrificing returns. Um, and so that's a lot of the activity at our in-person and virtual events. We also distribute a lot of resources and kind of act as a hub for trustees or investment committee members that might want to learn about these issues and can kind of come to one place and see that curated in a way that's more relevant to endowments, because there's a lot of, it's kind of overwhelming how much information there is out there on these topics.
Yeah.
And then the benchmarking project that you mentioned is relatively new. And so, a few years into this network, some of our members were asking if there was any way that they could get some recognition or sort of credit for the progress that they'd made. And we thought that was a interesting, exciting idea. But again, it's quite complicated. Like a lot of endowments look different, operate differently from one another. And there's lots of ways to go into this work. And so it took us some time to sort of design that, but we did come up with this platform, and we engaged a third-party verification firm called Bluemark that does impact verification for institutional investors. And they helped us design it. And now so endowments can fill out this questionnaire about some of the progress or steps they've made in different aspects of sustainable investing. And they provide an evidence base in terms of the policies or practices that they use. And then Bluemark takes a look at all of that, evaluates it, kind of has a scoring rubric to give them a rating in terms of how far along they are compared to their peers on some of these topics.
What does that rating look like? Is it A, B, C, or is it 1 through 100? Or
It's like a bronze, silver, gold, platinum kind of medal rating. Yeah. Yeah.
And the platinum investors are doing what?
Well, it's at this stage, it's still kind of relative. So the platinum investors aren't necessarily doing everything they could or need to do. There's sort of perfection, I think, still lays a way off for most investors, but they're kind of the best of the best right now. And that will entail, really looking at these issues holistically, in terms of environmental and social impacts of their investments, but also how environmental and social factors influence or impact the investments and the investment performance. Taking a whole portfolio approach. So, some institutions will say, we're just going to look at our public equities, but not worry about our private market investments or our fixed income investments with regard to these issues. So those that are doing kind of more comprehensive, looking at the whole portfolio. And then there's points you can get for, just transparency and kind of being open about how they're approaching these issues and reporting out back to their stakeholders. And just an interesting dynamic for those who aren't familiar with endowment management. Almost all endowments and foundations allocate portions of their portfolio to external managers, so firms that have expertise in a certain asset class. And most of them, or a lot of them, except for the very large ones that have big teams, most will work through an investment consultant that helps them select those managers and work with those managers. And so that's an important piece of it too. It's just how the endowment has those conversations around these topics with their managers, because there's a lot of influence that they can have because they're the client, they're the end asset owner at the end of the day. And so, how they engage with their managers is another key part of that scoring.
And like you said, there's always more. There's always more to be done. I mean,
Yeah.
easy to get rid of your oil and gas and coal stocks, but you're going way beyond that, aren't you?
Yeah. And I would say that's a relatively small part of the conversation, that divestment or negative screening, it's called, where you sort of screen out certain industries or companies. And a lot of, institutions do that, but a lot of the focus in our network is around what are the positive opportunities to invest in solutions, climate solutions, or strategies that might help address inequality or social issues that also have these strong kind of risk return profiles that endowments are looking for.
So let's talk about a few case studies.
Mhm.
What universities, or I don't know if you want to name them or not, but give me an example, or give us an example of one that you're particularly proud of, this or that's particularly notable.
Yeah, there's several. I know it's funny in these days, you're sort of like endowments are often fairly not public, just by the nature culturally, but particularly in this political environment. But some are, you know, still talking about what they're doing pretty openly. And
Yeah.
there's several kind of a handful that have put out a lot of public reports on what they've done. University of California system is one. They've been a long time leader in this. I think they took a great response. They had a big divestment campaign from the students there, and they took a really comprehensive approach, starting 10, 11 years ago, around a sustainable investing framework that looked at, both negative screens and positive investment opportunities, looking at a variety of issues across asset classes. And they're really large because the Office of the Chief Investment Officer manages the endowment, which I don't know exact figures where it is right now, but well over $20 billion last time I looked. But that's pooled with their retirement assets too, which are well over $100 billion. So it's a really large pool of assets, and a very professional team that's looking at these issues. Arizona State University is another one. They've been just a huge leader in sustainability for the past 20 years. Their president, Michael Crow, has really helped integrate it into everything the institution does. And when we got this network going, their foundation endowment was quite a bit smaller than it is now. It's grown a lot, but also, hadn't done a whole lot in this area, but they really embraced it and said, this is an aspect of our sustainability strategy that we haven't moved forward on so much. And they've made tremendous progress in the last 10 years, really becoming a leader and, working with their board and foundation to get everybody on board with a approach that everyone is comfortable with. So, yeah. And then there's,
Oh, you go ahead.
I was gonna say there's, some smaller private institutions. We really have institutions of all kind of shapes and sizes in the network. But yeah, those are a couple standout leaders, I'd say.
Yeah, I was thinking about ASU. I mean, they, my business, the solar business. I mean, they've been a real leader on campus. I think they've got one of the largest solar portfolios of any university in the country. And I was wondering, have you had instances where you've sort of people have become awakened to the fact that you got this money invested off in some company, XYZ company, and you should really invest it on your own campus and invest in efficiency and on-site solar?
Yeah, I think most campuses were further along on the campus operations side than they were on the investment side.
Yeah.
And Michael Crow in Arizona State was sort of one of the primary drivers of that president's climate commitment I mentioned. And then, so most kind of move from the campus operations piece to thinking about how their investments are aligned or not aligned with that. But we have had some interesting conversations where, because oftentimes, they can be big off takers of like power purchase agreements. And then there are their funds that are, financing some of those renewable projects that are looking for investment from endowments, and so in some ways they can be both the investor in these funds that are developing these projects and then the off taker. So you do get a little bit of a circular kind of financing happening there.
Sounds very fulfilling what you're doing. It sounds like a very satisfying job.
It is for the most part. I mean, I would say sometimes, if anything, we're a little upstream from the action, because we're dealing with investment committees talking about policy and how to select investment managers. And we think that has a huge impact in terms of leveraging capital and driving attention towards these solutions that need to happen. So it is very fulfilling in that way. But yeah, some days when you're on conference calls and it feels good to get out there and put a solar panel on a roof or something and see the impact a little more directly.
And there's still, even though we've talked a lot about the upside here and the progress you've made, there's still a bunch of laggards, right? In your view?
Oh yeah. Yeah. I didn't quite get to your question earlier about that. I mean, I think most institutions have had these conversations on some level by now. Some are just, still kind of dismissing the concepts outright and sort of still have this sense that if you limit your investment universe at all, or if you consider these environmental and social factors, you're going to risk having lower returns. And again, that's not the case when it's done well, but I think that's just still a really strong mindset for a lot of investment committees out there. But I think there's also a lot that are kind of in the middle where there's some interest. It can be confusing. It's still a new industry or a new kind of field in many ways, and the terminology is still kind of being worked out, and people can sort of mean different things with the same language and stuff. So I think there's a lot of conversations happening on boards in that way that haven't yet committed, but are looking. But every year that goes by, there's more and more track record from investment managers that are taking some of these sustainable investing strategies and showing that they can work and perform well. So I think we'll keep moving.
George, why is it that the Boston area seems to be a hub? I mean, you mentioned earlier Second Nature, which I'm well aware of.
Mm-hmm.
Aishi perhaps was formed by Tony and others
He had a hand in it. Yeah.
Mark Orlowski is there with the Sustainable Endowments Network.
Yeah, that's right.
You guys are there. Are you all? It seems like it's almost a club of. You're all in the Northeast. You're all in that Boston area.
Yeah, and there are a lot of some of the early pioneers in sustainable investing have come out of Boston or still in Boston as well. Trillium Asset Management and Boston Common and some of these firms. But yeah, I don't know. I think maybe coincidence. I think maybe just a high concentration of colleges and universities and financial institutions around Boston, just sort of historically. So maybe that's led to this intersection. But yeah, it is kind of funny.
Very progressive crowd up there.
I guess so. Yeah.
Well, I mentioned Mark's group, Mark Orlowski, the Sustainable Endowments
Institute. Yeah.
Do you partner with them, or they're not competitors? I wouldn't think.
No. And we worked when this all started, I mentioned, the students were putting pressure on and presidents were wondering how to respond. And so it really started with an initial conference we had in 2014 with Hampshire College, because Jonathan Lash was the president at that time. And Jonathan Lash had run the World Resources Institute before that. He's a big environmental leader. And so he raised some of these questions around Hampshire's endowment right when he got there. And then it turned out they had very low investments in fossil fuels. And so they ended up basically divesting. And so when the student movement really took off, a lot of presidents were calling Jonathan to say, what did you do? And how'd you do it? And why? And should we do the same thing? And at the same time, we were at Second Nature and getting a lot of similar phone calls about, how presidents should respond to this. And so we at Second Nature and Hampshire College organized this initial conference to get people together. And Mark Orlowski we pulled together a steering committee to help design that. And he was on that steering committee. And so he was sort of part of the genesis story there as well.
Yeah.
And he had done some really great work, and interesting work. He had put together a scorecard back in the 2000s that were sort of rating colleges on sustainability, and that drove some action early on. But I think a lot of their work ended up going into how do you finance the solutions on campus, and work with green revolving funds that could help pay for energy retrofits and those types of things. And they've since developed a kind of a calculator tool to help figure out how to best finance some of these sustainability projects. So they kind of started moving that direction around the time that this fossil fuel divestment movement was picking up. And so we kind of started working more with the endowments on their traditional investing side.
And he had that tool, I guess the GRITS tool, right?
Yeah.
That's actually measuring the carbon intensity on the campus. And then the $1 billion green challenge
that's right.
Was that his initiatives?
Yeah, that was the Green Revolving Fund initiative, where they were challenging schools to establish these funds that could pay for energy retrofits and get paid back with the savings. Yeah.
But am I wrong? Now we all the way back to the top. Are there $650 billion of endowed assets?
It can sort of change day by day with the markets, but it's actually, I think, closer to 900 billion now in the U.S. from higher ed endowments.
But you're also going after these retirement funds, I take it.
Yes, we've done some work there, and that's been interesting. I mean, there's, it's in some ways more highly regulated, and there's a lot more guidelines around how those funds are put together. But have been working to sort of raise those conversations. There's also a lot more demand, I think, from faculty and staff at institutions to have options that are both aligned with their values, but also take into account these sustainability risks and opportunities. And so, yeah, we've been doing some work to show that, help elevate that demand and help the plan sponsors kind of add more sustainable investing options to the plan lineups. But it is a kind of a more complicated ecosystem of how those plans are designed.
So when you were a little boy, a young man, did you ever think that you would try to influence the investment portfolios of these institutions?
That's a great question, and I don't know if I'm embarrassed to admit, but in some ways, yes, I was. I mean, I sort of got interested in environmentalism and sustainability at a pretty young age, and then through high school, you know, did a lot of learning and thinking about how I might work in that field and what sort of most seemed like it needed to be done. And it's probably in college where I started focusing more, thinking more about how just the economic system itself, was driving just sort of the perpetual growth model was driving so much of the unsustainability, and how businesses and how we go about meeting our needs could really be transformed to do so in ways that are sustainable, and don't, systematically destroy nature. And
Right.
yeah.
Good
So
stuff.
thinking about the economic system has been, actually has been something I've been thinking about for a long time. And obviously investors are one piece of a very complex system that is the economy, but I think a pretty important piece. And it's been really interesting for me to work with these investors that are associated with higher ed institutions, because obviously so much of the business and finance and economics education happens at these institutions too. And that's where a lot of these mindsets kind of get established or solidified, which we're then trying to help open up or change, because the world has changed a lot, in the last 50 years. And a lot of the economic or finance theory hasn't necessarily kept up.
A couple points I wanted. You're certified in permaculture, which I thought was very cool, by the way.
Yeah, thank you.
You're an Exeter guy and a Dartmouth. I was wondering if Dana Meadows was part of your life.
She was. Well, I actually never had her. She unfortunately passed away while I was there, and I never had a chance to take a class with her, a course with her. But her work has been very influential in my thinking, in my life. And yeah, the permaculture certification is probably long since expired, but I still try to practice it around the house. It's a lot of great concepts around sustainable agriculture and living.
And then a new initiative that you've launched is a podcast.
Yes.
Congratulations. You have
Thank you.
Future of Finance. Is that what it's called?
The Future of Finance. Yep. I was inspired by you and all this great work that you've been doing here. But yeah, no, we have this network, and we are always trying to get, I had a lot of conversations with our network members about the amazing work they were doing. Yeah. And we were doing webinars and our events, but you can only kind of do so many of them. And so it finally clicked in as I figured out that we could do a podcast. And so yeah, I've been having about one a week and just getting these conversations out there so that people can hear both from asset owners, how they're thinking about these topics, and then the asset managers that are kind of delivering the solutions, as well as other just sustainability leaders or people in kind of any of this work, whether it's directly related to finance or not, it's all connected. So yeah, it's been fun.
I think the storytelling is so important, really.
Mm-hmm.
There's all the technologies, there's all the proof, there's all the data sets, but hearing like you, I love your peer network, your peer learning network concept is just,
yeah,
that's what people want to hear about. How did it work for you?
Mm-hmm. Mm-hmm. Exactly. And you just realize there's so many people out there doing such great work that it's exciting to hear. And I think, that's another thing I love about this work is it can help us focus attention on the positive and moving forward, and not get too caught up in the negative and all the doom and gloom, which is, very real. We can't really ignore it, but at the same time, we can focus on the positive, and there's a lot of good work.
You and I are very similar in that regard. There's a lot of doom and gloom out there. There's a lot of huge challenges still that are being thrown at us and that we need to overcome.
Yeah.
Focusing on the positive is sort of like riding the wave. It feels really good. And
exactly.
It's a little tenuous, but it's so important to tell the stories. So that's great.
Yeah. And I think that the vision of a sustainable society is so compelling. Obviously it can be misconstrued or misunderstood, but just the idea of finding ways, and there are ways, there's technologies and just ways to design our cities and our buildings and our transportation systems and our energy systems so much better that we can live more fulfilled lives. It's not about sacrifice, but do so in ways that don't undermine the natural systems we depend on.
Totally agree. We're just pointing out the win-wins, aren't we? The win-wins, like you said up at the top of this discussion, your portfolios or the portfolios of your members are doing equal or better with sustainability than they were with fossils. And
Yeah.
so we're taking care of the economic realities of the day and environmental imperatives of the day as well. So
Exactly. One other example on that note, actually, I should have mentioned Rockefeller Brothers Fund is a great example too. Obviously from the old Standard Oil family, so kind of very historic ties to fossil fuels. But
West, yes.
yeah, they divested 10 years ago, and they just put a report out about their financial performance over the last 10 years, and it was very strong and outperformed peers. So there's another specific case study of how it can work.
George, congratulations. Thank you for being on the podcast.
Thank you. Thanks for having me. Great to see you. Thanks for all the good work you do.
That's it. Thanks for listening to Flanagan's Ecologic. We'll see you next time.